Welcome back. You're listening to the Keeping Your Money Show with Jamie Westenbarger. You'd never drive to a faraway city without a map and an idea of where you're going. So don't drive into retirement without them either. Take the first step and get your free financial roadmap from Jamie himself. This may prove to be the best 60 minutes you've ever invested in your financial future. Call to schedule your appointment now. 888-98-MONEY. That's 888-986-6639. And now, here are your hosts, Jamie Westenbarger and Bart Steinler.
All right, welcome back to the Keeping Your Money Show. I'm Jamie Westenbarger, joined as always by Bart Steinler. If you're just tuning in or you've been listening the whole time, we were talking about potential issues with the market going forward and what you should be looking for and understanding and knowing what you're invested in. We discussed HSAs, how they can be utilized for other things than just immediate medical costs, how basically it's like setting up a third IRA for you and your spouse and ways that you could do that. If you ever miss any part of the show or you want to listen to it again, you can always find it on our website. Just go to keepingyourmoney.com. Click on the past shows tab. You'll see them listed there. Or you can find us on iTunes as well as SoundCloud. Search for the Keeping Your Money Show, and you can download our podcast there or sign up for ongoing downloads of the podcast. That's one thing that's cool about iTunes, not to promote one company over another or anything, but, I'm not even an Apple guy, but I like iTunes. And, you sign up for a podcast, and every time your device connects to the internet, it basically looks for an update, of that podcast, which is kind of cool. You don't have to go in and intentionally download
search
things.
It out.
Yeah. Now, one thing that you do want to do that I've realized is you want it to, only download the 5 most recent, or set it to automatically delete the ones you've listened to, or you get on a plane and you have 47 shows of the Keeping Your Money Show. And as much as I love this show, 47 versions of it on an airplane.
You can't even listen to yourself that long.
It's a little much. So, I was like, why do I have so many of these? So it was, and I've done that with other things like This American Life. I have 113 versions of. Whoa, that's a little bit much of that.
Well, it's a great way to travel. I mean, if you get tired of listening to commercial radio, or you get tired of
just radio in general,
the music that's playing or something like that, and you just want to have some stimulating conversation on different topics, load up some podcasts and listen to them while you're driving or flying.
The station that my son loves to listen to, they basically play the same 7 songs, just in various different, repetitive order. Mm-hmm. It's like, look, dude, I cannot listen to Selena Gomez's latest song for the 19th time in the last 7 days. Like, I just can't do it.
That's the difference of having a child at home and being an empty nester.
Right? You don't run into that issue a lot?
I haven't heard that song yet.
All right, so let's talk a little bit about insurance, because if you work for an employer, usually we see this with, maybe larger employers, or at least employers with more than 10, 15, 20 employees. A lot of benefits exist at work. One benefit we've talked about a lot is that match on the 401k. And, we've probably beat that into the ground, that if you are not taking the full match available to you, you are giving away free money. So I felt the need to drop that in here real quick too, because it's still amazing to me how many people do not take advantage of the match that's available at work. It's free money. Take it.
Yeah. No question about it.
Yep. But another benefit we see a lot of times is employer-provided insurance, whether it's life insurance or disability. Sometimes we see long-term care available. And unfortunately, many times that generosity by the company to make that available, sometimes even to subsidize the cost of it, can give an employee maybe a false sense of security, or a false sense of they've got all their bases covered.
Right.
Because since they have this at work, they don't feel the need to necessarily look or compare that to what's available on the private market. And many times that can put people in a really dangerous position. One thing that they highlight in this is that, the average employee life insurance is usually 1 year's salary or less. And of course, that's much less than the average person should be carrying in life insurance, especially when just the average mortgage balance is $110,000. You definitely need to make sure that you have at least enough to cover what your obligations are, and many people don't.
Sure, I can think of a case of speaking to someone who was a fairly high-level executive and had a significant amount of life insurance through work, and was under the assumption that he would be able to carry that on after he retired. And that was not the case. And it was his desire to have some life insurance in force. But, once he retired, it wasn't available. And because of medical conditions, he wasn't able to go out and buy it on the open market. But even if he was, it would have been extraordinarily expensive to, start purchasing a life insurance policy when you're in your late 60s.
Sure. Yeah. Yeah. And so many times people kind of, they take, even if they take more that's available at group,
Right.
I've seen people say, well, I have 10 times my salary at work, which, that's probably a fair amount of life insurance to have. But the question is, do you feel confident that you will be at that place of employment for the rest of your life or the foreseeable, long-term future? Because you mentioned two things there that really come into effect. Many times when you leave an employer, it could be because of age or because of an illness or an injury. Both of those things could make life insurance on the private market very difficult or even impossible for you to get. So while, yes, it may be convenient to get this through your work, it may not be in your best interest when you could purchase something on the open market for yourself that then you own for as long as you'd like to own it. And I think it's really interesting. I don't think people really understand how inexpensive term life insurance really can be. Like, we think of insurance as this really like ominous, expensive product, but term life insurance is actually pretty reasonably priced nowadays. Life expectancies are much longer. Life insurance companies, for the most part, take very little risk in giving $1 million to a 32-year-old, male who's in good health. So, you can get that relatively inexpensively.
This statistic is a little bit old, but I doubt if it's changed very much. I think on term policies, insurance companies only have to pay a death benefit on 4% of the policies that they sell.
Yeah, they actuarially know very few people of these are going to actually die.
Right.
But if it's you, your family will be very happy that you had that policy in force. Barton, I'm sure you've had this too. I've had clients pass away who we sold life insurance to, and the difference between them having that and not having that, it's
huge.
It's just a gigantic difference.
Right.
So, and the other thing to think about with life insurance, I know there's a lot of commercials. I hear them on the radio all the time and stuff.
Very misleading commercials, by the way.
Very misleading. First of all, don't ever take the quote that's given on a radio or television commercial to heart. There are so many different companies. There's so many different ratings. There's so many different classes you can fall into. But here's the thing.
That's a hook to bring you in.
Yeah. Regardless of where you buy the life insurance, okay, whether you buy it from an 800 number, whether you buy it from a website, or whether you buy it from an independent agent, you're going to pay the same price. The life insurance company doesn't discount it because it's on a website. They don't discount it because it's at an 800 number. The difference is the commissions that are earned at these 800 numbers don't give you an agent to actually help you. So when you're looking for insurance, make sure you work with a local independent advisor or agent that can help you kind of sort through the differences in products. They'll be there if you have a claim or a concern. They'll be there if you need to make adjustments or changes. There's no reason not to, because you're going to pay the same regardless. You might as well get the local service. And when you look at some of these 800 numbers, are these gigantic conglomerates selling all of these policies. It's like, well, obviously the average person doesn't understand that the local agent would give them just as the exact same price that 800 number would give them.
Right.
So,
and the other thing is, it's I think the tricky part about buying life insurance is getting a plan that fits your needs.
Right.
And
not being sold something you don't need. Not being
sold something. So, you got to take into account a lot of things. Do you have children that are depending on you? Mm-hmm. Well, you should buy a lot more life insurance if you have children that are depending on you.
Right.
A lot of these formulas are basically misleading, like 10 times your earnings. So if you're buying 10 times the amount of money that you make, then your family is going to have the same paycheck that you've had for 10 years.
And then what?
Yeah. Exactly. Is it your goal, if you died prematurely, to provide for your family for the next 10 years,
right,
and then they're on their own?
Right.
or that your spouse is going to have to figure out how to replace that income, or be in a situation where they need to look to remarry because of income. I mean,
well, and also think about it this way. I mean, everyone's lifestyle is different, right? I mean, you can make $100,000 a year, owe nothing on your house, have no debt, and you have fully funded retirement and education plans for your kids, right? Mm-hmm. Well, you probably don't need as much life insurance.
Right.
You can make $100,000 a year, owe $600,000 on your house, have 2 car payments, $30,000 in student loan debt you haven't paid off yet, some credit card debt, and you've been thinking about setting aside money for your kids for college, but haven't yet. Well, those 2 people have very different life insurance needs. To just slap a rudimentary figure like 10 times your salary really doesn't mean anything. If both of those people use that number, the first example would be probably buying more life insurance than they needed, and the second number would probably be buying way less life insurance than they needed.
And that's where the value of a trusted advisor really comes in.
Yep, absolutely.
Because you're not going to pay any more in premium for getting that
advice. Independent. I can't stress that enough.
Right.
If you go to a life insurance company to look for life insurance, you will not get the best deal. That's all there is to it. And if you're buying term life, right, you don't need some fancy company to give you term life insurance.
Right.
You need a company that has enough money to pay when you die, has a good financial track record, and is stable. And that's pretty much it. I don't care if they have a big, concrete stone in the front of their building. I don't care what city or state they're based in. I don't care what cartoon character represents them. I care about their ability to pay out if I die.
What about if they have a stadium named after them?
No, you definitely don't need a stadium named after you.
Okay.
But, like, for instance, if someone was to run a quote through an organization like ours, we go through a local brokerage company that shops everywhere. And they come back and say, here's the best price with a highly rated insurance company. Sometimes companies people never even really heard of, but are very good when it comes to life insurance. And that's really what you're looking for, right?
Absolutely.
So, all right, coming up, we're going to bring Nate Boonstra in. He's going to talk about the 8 financial mistakes that millennials are making right here on the Keeping Your Money Show.